Hey there everyone, I am your wealth wisher Pruthviravindranath. Welcome back to my channel. Investing is complex, and adding to that, investing in mutual funds is still more complex. Why? Because there are a lot of jargons involved, there are a lot of complex topics which a layman investor will not be able to understand. And that is where I'm trying to break down the concepts of mutual funds in a very simpler manner so that you can connect the dots and you will be able to understand in a very simpler way. So today we are about to break down a concept which is very crucial if you are planning to invest in mutual funds or you are already investing in mutual funds. The concept for today is net asset value of a mutual fund. In short, NAV. What is NAV? What are the factors that impacts your NAV values? How the NAV is calculated? What is the importance of NAV as a whole? All these topics will be discussed in this video. Stay tuned, watch the complete video, make notes wherever possible, and share your learnings in the comments below after watching the complete video. So for now, let's get started. Let's start with analogy. Imagine you and three of your friends decide to party, and during the party you decide to buy a big pizza. But you follow a system called military system, wherein you decide each one of you will get the slice of pizza proportionate to what amount they pay. So consider you are buying a 1,000 rupee pizza which has 10 slices. And friend number 1 pays around 100 rupee, friend number 2 pays around 200 rupee, friend number 3 pays around 300 rupee, and you yourself will pay around 400 rupees. So now, how much slices of pizzas will be proportionately distributed? There are 10 slices of pizza, 1,000 rupees is the cost of pizza. When it is divided by 10, it is 100 rupee. So the first person will get one piece, the second person will get two pieces, the third person will get three pieces, that is the 3 slices of pizza, and you yourself will get 4 slices of pizza. So this is how the pizza party works. Similarly, let us draw a parallel to mutual funds. In mutual funds also it works in a very similar manner. Here it is not about four friends, it's about lot of investors coming with a similar objective. Like how you guys decide to buy a pizza, there are a lot of investors with a very similar objective, and they chip in money from different parts of India, different parts of globe, and it comes to one pool, and that one pool is managed by our pizza maker, the fund manager. Okay, and he prepares the pizza called the investment portfolio, and this investment portfolio has lot of securities like stocks, bonds, and other securities, gold and other securities. So using the money, he has bought securities and he has created the investment portfolio. Okay, now it has to be distributed to all the investors proportionately. So how it is measured? How a pizza has slices of pizza, similarly mutual funds have units of a mutual fund, and this will be distributed proportionately to all the investor according to their investment. Now, as a slice of a pizza has a cost, that is 100 rupee, similarly the unit of a mutual fund has also a cost, and that cost is called net asset value. So NAV of a mutual fund is the cost of a unit of a mutual fund. As simple as that. Why the cost of a mutual fund is called net asset value and not just asset value? Because it is all about the net assets what we consider and not just assets. So what does net assets mean? Net assets mean the total value of assets of a mutual fund, which is subtracted by total value of liabilities and expenses. And when this number, net asset number, is divided by number of units of mutual fund outstanding in the market, is called the net asset value. Let me explain with an example here. Consider there is a mutual fund whose total value of assets is around 1,000 crores and the total value of liabilities is around 100 crores. And there are 10 crores of units outstanding in the market. So what is the net asset value of a mutual fund here? 1000 crores minus 100 crores, that makes 900 crores is the net assets, and when it is divided by 10 crores, that makes 90 rupees per unit, and this is the NAV of a mutual fund, right? So you have understood what a NAV is, how NAV is calculated. Now we will understand why understanding NAV is important, how it impacts your investments. This is what we'll learn in the next part. Why understanding NAV becomes so much important when you're investing in mutual funds? Because the net asset value determines the valuation of your mutual fund. Let us understand here, the net asset value is the cost of a unit of a mutual fund, and each unit of a mutual fund comprises of a proportionate amount of stocks, bonds, gold, and assets, whatever the fund manager has picked. And these assets tend to change as per the markets, and thus the NAV will change. And when the NAV will change, the valuation of your investment portfolio will also change. So we need to understand what are those factors which impacts your investments. Number one, it's market movements. Because the units are made up of stocks and debt instruments, the stock market and debt market tend to move up and down, tend to be volatile. And whenever markets go up, the value of the NAV will go up, and when the markets go down, NAV tends to go down. Reason number two, expenses. Whenever there are higher expenses, the NAV will go down, because what is net assets? Net assets is equal to total value of assets minus total value of liabilities and expenses. And whenever expenses increases, the net assets will come down, and whenever the expenses are lesser, then the NAV will go up. And number three, redemption in investments. If there are huge redemptions going on, then the value of NAV will go down, because the basics of economy comes in picture, that is the demand and supply. Whenever there is huge redemptions, the value of NAV will go down, and whenever there is huge investments, the value of NAV will go up. So these are three main reasons why the NAV will change and how the NAV change will impact your investment portfolio. In a nutshell, the net asset value is the price at which you buy or sell the units of a mutual fund. And the NAV also reflects the fund's performance. This is very important to note. If the fund's performance is good, NAV tends to go up, and thus the investment portfolio value as well. So it's always important to track NAV, but it's always important to make sure not to time the market. It's important to continue investing on a month-on-month basis through a very beautiful strategy in mutual funds called systematic investment plan. I've created a simple video on what is SIP. Please watch the video wherein you will get to understand why systematic investment plan is the best way to accumulate units in a mutual fund. Saying this, if you like this video, share with your friends and family members. Subscribe to my channel. If you like this video, please hit the like button, and don't forget to hit that bell icon so that you will never miss an update from my end. Saying this, thank you for watching this video till the end, and happy investing.